Hi, I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about, I think you guys from the title, the market falling. The market is down horrendous. The S&P dropped about 1.7%, which is one of its highest, or no, the highest drop since May, which is insane. We're looking at stocks like Apple and Google and Facebook and just these big techs, and also small caps fall in valuation like crazy. This is providing us a lot of opportunity as investors, and we're going to be talking about all that today, about why the market's falling, what we should do, and just everything that encompasses that. But before we do get started, I would really appreciate it if you could smash that like button, as it helps push this video on the YouTube algorithm and just helps out the channel as a whole. Also, if you do like this content, go ahead and subscribe, as you can watch more of it every single day. All right, now let's hop straight into the video. Okay, so let's get started. So the market has been insane. We had crazy rallies with Google and Apple going to all-time highs, and then we had now substantial dips. And the reason for these dips are several. So first off, we have the Fed, which is going to be talking about potentially tapering in the next coming days. This is a very big thing to notice, because the Fed is going to talk about tapering, right? And a lot of people look at this and like, oh my God, this is going to be insane. If the Fed tapers, it's going to be super bad. And or what if the Fed says that they're going to taper next month or something along those lines? I personally don't think that the Fed is going to taper yet. I think there's still a lot of things unresolved that the Fed would not want to just blow up by having the taper happen now. So I think that they are going to hold out until November, or maybe even they'll kick the can down the road and do it in 2022, 2023, something like that. So I think for now we're fine with that. So personally, I think with my kind of like analyzation of all of this, that we're going to be okay. However, the market personally, or the market as a whole, does not see this. They see this and they're like, oh my God, what if we taper? This is going to be insane. So I think this gives us kind of a nice look at like, okay, the market's freaking out. And what do we know? We know that when there's uncertainty in the market falls. Then when there's certainty, even if it's bad certainty, it's definitely better for the market, as the market starts to rally some more, as there's definite and clear things that are going on. Like during the election, the market fell about 6%, which was insane. And everyone was like, oh my God, the market's falling. And there was a bunch of things going on. And then when Biden got elected, some stocks rallied and some fell. And, there was all this going on. And I think that this is an important thing to know, because we know, okay, when the market is very volatile, when the market's freaking out, the market falls. When the market has certainty, it flies. So I think this gives us a few days of potential buying opportunities. As we know that Evergrande, it's a big corporation in China. They're struggling with their debt, and they still have another debt to pay off. And I think that China is going to make an example of them as saying, this is why we need more regulation. And I think this is really bad for the Chinese market. I'm pricing in a lot more selling for Chinese stocks, which is why personally I'm not that interested in most Chinese stocks. However, Alibaba, I am somewhat interested, and I'm pricing in a lot of falling for that, even though it's already fallen substantially. If it drops about $100 though, I think I would be very inclined to pick some up, as I think that China, yes, they've made some mistakes, and they're kind of a very harsh government and how they run things. But I think that they already made an example of a lot of companies, and if they continue to fall, I'm definitely excited to buy in to Alibaba. Now, continuing on, we have a lot of things going on. We have Delta still rising. We still have fear of the real estate market. We have fear of inflation. We have fear of the Fed. We have fear of everything. There's so many things going on that so many people are worried about, and this is what's causing the market to fall. Now, what do we as investors do now that we're here? So I think personally what I'm personally doing is I'm buying the dip. I added about 10% of my portfolio worth of cash. I added in, but if you guys watch my portfolio review, it was at about 1,200. That was adding the fact that I had 100 sitting in cash. I added that 100 into the market, averaged it into a few stocks, and I'm pretty excited with that. I bought the dip a little on Apple, bought a little Google, and I'll show you all my purchases here. But I did buy the dip, and why am I buying the dip so early? The reason is because I have a bit more cash sitting on the sidelines. I have about 3 something in cash sitting on the sidelines, which is give or take 25-30% of my portfolio, and I'm ready to allocate that to stocks if necessary. If need be, I will continue to pile in as much money as I personally have and as much as I can, because I think that if the market does sell off, this is where we get our great opportunities. Remember March and April when a lot of tech stocks are selling off, and then they rallied from there to here? That's what I'm excited for. I am truly excited to see if do we get these insane dips, and I'm ready to buy those dips. So I'm looking at a lot of stocks right now. I'm not looking to add any new positions, but I'm looking to add to my current 11 positions, which if you go watch the breakdown of my portfolio in the last few videos, you can go check that out and see what is exactly in my portfolio. I'm looking to add to those positions, and I'm very excited into. And I think that these dips are honestly great. If you're a real investor and you're not trading or speculating, then you know, okay, if this pair of glasses go down from $10 to $1 and you wanted those glasses, why are you not going to go and pick up as many of those glasses as possible, right? So the stock market, as Warren Buffett says, is the only thing that when the price goes down, people freak out and don't want to buy that thing anymore and even sell that thing for a loss, which makes no sense. Everywhere else, you see a discount and you're like, oh my God, let's buy it now that it's at a discount. And that's the way I'm looking at the market right now. I'm not too worried about all these things. I think that they're momentary things, and I think that once they do subside, that we'll get a lot of easing, we'll get a lot of pain go away, and we'll have bought those dips, or at least I will have bought those dips, and I'll be very excited there, and we'll continue to rally from there. So I think that, yeah, maybe we do get a bit more of a correction, but I'm definitely ready to buy those dips. Let me know what you think about this market crash or market dip right now. Let me know if you think it's going to continue to fall, if you're buying the dip, if you're waiting to buy the dip, what your insights are. Let me know in the comment section down below. Also, if you did enjoy this video, once again, feel free to smash that like button and subscribe if you want to watch more of my content in the future. You can also sign up with Public down below if you want to get up to $70 of a stock of your choice just for signing up, and that'll get your foot in the door if you haven't started investing. And if you already have started investing and you don't have an account with Public, it's up to $70 for free, so go ahead and get that. Now, see you in the next one. This was Kev's Mindset.